everyone, my name is Tim and I'm the trading coach at Master the Gap. In this video I'm going to introduce you to a new tool called the Wizard. The Wizard was designed to help traders better understand the complex topic of trading mathematics. There are tons of educational books out there that teach traders how to calculate all the different formulas, but trying to understand how each of the different calculations affect one another is a very challenging task. The Wizard was created to take all of those formulas and make it very simple to understand how they work together. The Futures Wizard allows you to plug in all the variables from your trading methodology and then analyze different combinations of win percentage, profit factor, number of trades per month, and stop size in order to gain a better understanding of how many contracts you should trade to stay within your risk tolerance. It also enables you to analyze what type of estimated returns you may be able to achieve on a monthly or annual basis based on the different combinations you input. Let's go through an example. We will use a starting initial capital amount of $100,000 and we'll assume that a 20% annual drawdown is the max pain we could stand. That equates to $20,000 as a max acceptable drawdown. What that means is if our trading methodology had a drawdown that hit the $20,000, we would halt trading. The win percentage we're going to plug in below is 65%, profit factor of 1.3, and an average number of trades per month of 8. The next section that needs to be populated is the consecutive loss calculator, and the first input is the dollar value per point that the instrument trades. We'll use the S&P 500 futures contract, which trades at $50 per point. We're going to assume a 6-point stop, and based on another tool built into the Wizard called consecutive loss calculator, I know that by requiring a 65% win rate, that there is less than a 10% probability that I would ever experience 6 consecutive losses in a row. Therefore, I will use that as my input for max consecutive losses. If you're able to backtest your system, you can input the max peak to trough drawdown for your system, and if it's larger than the consecutive loss calculation, it will be used to calculate the number of contracts to trade. However, most folks don't have the tools or desire to backtest, so using a consecutive loss calculation is the best data that is available. And since we used a consecutive loss value that has less than a 10% probability of occurring, it should serve as a pretty good guideline for our calculations. Based on these inputs, you can see that the amount of contracts you can trade and never reach your max acceptable annual drawdown is 11 contracts. Also, on the right-hand side, based on these same inputs, your theoretical average return on a monthly basis would be 2.8% return, and that equates to 33.3% on an annual basis. However, one thing to note is the fact that you are risking 3.3% of your total capital on each trade. That value may be too much perceived risk by many traders, so you can input your preferred risk per trade below. I'll use 1% as an example. Notice how when I plug in the value of 1%, the monthly and annual percentages are affected significantly. The real power of this tool is discovering how the outcome is changed if only one input is changed, as you've just seen. For example, what if our profit factor goes up to 1.5 instead of 1.3? Even using our 1% preferred risk below, you can see over on the right hand side that the percentage monthly return and percentage annual return is significantly increased. Having the ability to experiment with different combinations of inputs is an extremely powerful analytical tool, and one that should be employed by all traders. The next tool that we're going to take a look at is the Win Percentage Profit Factor Analyzer. The analyzer enables you to determine which combinations of win percentage and profit factor will allow you to potentially obtain your monthly and annual percentage return goals. Let's go through an example using this tool. The inputs required for the analyzer are margin per contract, percentage risk per trade, and number of trades per month. We will use the results from the first analysis we did using the Futures Wizard. So our margin per contract from that analysis was $9,000. Our percentage risk per trade was 3.3%, and our average number of trades per month was 8. We can then, using the drop-down filters, we can then select the win percentage that we had used of 65% and a profit factor of 1.3. As you can see, the monthly percentage returns and the annual percentage of the returns are the exact same as what was generated by the Futures Wizard. We can then further analyze the results by maintaining a constant profit factor and allowing the filter to pull up all available win percentages. So by leaving the profit factor at 1.3, using our drop down menu and selecting all, you'll see the results if you allowed profit factor to remain constant at 1.3 and the win percentages, which are in 5% increments all the way down to 80%. You can then see the different monthly and annual percentage returns based on these combinations. We can also do the inverse, in which we select 65% win rate and then drop down the profit factor menu and look at all the different profit factors from 1.1 to 2.0 and then analyze the different monthly percentage returns and annual percentage returns. Another great feature built into the analyzer is the ability to create custom filters. We'll first reset these two to all, and then we can do an analysis or a custom search using the filters to see what combination of win percentage and profit factor will enable us to obtain 100% annual return. So we simply drop down the annual percentage return filter, click on custom, select greater than or equal to, and then from the drop down menu select a numeric value very close to 100%. As you can see, the closest value is 99.8%. So we'll then pull all the combinations of win percentage and profit factor that would generate in excess of 99.8% return annually. Click OK, and these are all the different combinations using the above inputs of $9,000 in margin per contract, 3.3% risk per trade, and 8 trades per month. Using these combinations of win percentage and profit factor would then generate these monthly returns and these annual returns. Much like the Futures Wizard, the power of this tool is revealed by experimenting with different input values and analyzing how it impacts the overall outcome. That completes this overview of the new Master the Gap Wizard. It is an extremely powerful tool that makes it very easy for you to understand the math of trading. By experimenting with the different input values, you will be able to determine which combinations will allow you to accomplish your goals while protecting your capital. The Wizard is currently available through 2 of our coaching programs, Trading Math and Creating Your Own Custom Trading Plan. You can view details about both of those programs on our website. If you have any questions about any of our coaching programs or the new Wizard, please don't hesitate to email me at tim@masterthegap.com. Thank you for taking the time to watch this video.